Hello and welcome to the Lima market report for this week. I'm Marco Lima, here to give you a quick update on what moved the markets last week and to talk about a bit what we are expecting for the week of September 15th. Let's start with equities. Well, the S&P 500 ended last week modestly higher, gaining about 1%. Investors were encouraged by steady corporate earnings and signs that inflation pressures may be cooling. The Nasdaq, however, slipped slightly. Big tech names faced profit taking after a strong summer rally, while rising treasury yields weighed on growth stocks. What happened in the bond market last week that gives us clues about this week? Starting with bond yields. The bond market saw some volatility. The 10-year treasury yield briefly touched new highs as investors reacted to stronger than expected labor data and cautious comments from Federal Reserve officials. While bonds remain under pressure, the move reflects ongoing uncertainty about the timing of future Fed rate cuts, which we'll know about pretty soon. On the economic front, investors digested mixed inflation data. Consumer prices eased a bit, but producer prices came in hotter than expected. Geopolitical concerns about energy markets were on alert after renewed tensions in the Middle East, keeping oil prices elevated and adding to inflation concerns. This week, the focus turns to upcoming retail sales data and fresh inflation readings. A softer trend could ease concerns about higher interest rates, creating opportunities in the rate-sensitive sectors like housing and utilities. On the other hand, persistently strong data may push yields higher, which could pressure technology stocks and keep bond markets choppy. That's our quick look at last week's market performance and what's on the radar this week. Stay tuned, stay informed, and remember, I'm here to help and to navigate markets with clarity and confidence. Thanks for watching. I'll see you next week on the Lima Market Report, and make sure to visit mraadvisory.com for additional info. Have a good one.